Good morning and welcome to our daily market review. This is Andrew here, your host at optech.com. Let's take a look around at the markets. We have an action-packed schedule today with the Scottish independence vote, the referendum taking place in Scotland, whether for the Scottish public to decide whether they would like to remain as a part of the UK or whether they seek to move to an independent status. And moving on from that, there'll be a further issue of whether to keep the sterling pound or to move either to the euro or to a new currency. So that's probably the biggest news today in the market. We had the Swiss Libor rate this morning, the Swiss central bank interest rate essentially staying at hold at 0.25% as expected. Earlier on, we also had New Zealand GDP growth coming at 0.7, beating expectations of 0.6, and lower than previous and lower than expected trade deficit, trade balance by Japan. So that was a positive number, i.e. if the deficit was larger, it would be worse. So those are the main ones that came out. Retail sales in the UK came in at 0.4, pretty good number, in line with expectations. And this afternoon we have the main ones: building permits in America showing the health of the housing market, unemployment claims, continuing unemployment claims, which has come down from a level of above 500,000 at the peak of the crisis down to 312,000 now. Housing starts in the US as well. Fed Chair Janet Yellen speaks again following the FOMC meeting last night, and the Philly Fed Manufacturing Index, as well as the natural gas storage report as well. So yesterday we had really big news with the FOMC meetings. So the Fed funds rate stayed on hold, but there were two significant things. One of them, the market was looking for the language. I'll take you over to a report here as well, to the language that the Fed was going to adopt in terms of considerable. Until now, there's been a phrase used for the last 6 odd years saying that we're going to keep rates near zero for a considerable time, and there was some discussion around whether this would be changed and removed from the speech, and that would give the indication that of course interest rates would not stay near zero for a considerable amount of time. Without saying it directly, it has the same effect. So that was actually held. She did repeat this considerable time phrase in terms of keeping rates at close to zero. But the biggest change that happened was that, I'll take you to the report here on about the dollar as well. So in the FOMC projections, economic projections, where they will project the GDP growth they're expecting over coming quarters, inflation rates, and certain other metrics, in the June FOMC meeting, the projection was that by the end of 2015, the US federal funds rate would sit at 1.125%, whereas this was now reviewed higher by Janet Yellen and the FOMC to 1.375%, which means that they anticipate raising rates either quicker or in a stronger way, i.e. like greater rate rises. This amounts to 0.25%, which is called in the market a quarter of a basis point. A basis point is 1%. 0.25 is called a quarter of a basis point. So that's giving more yield to the dollar, and is also making the environment look like it's going to move quicker in terms of rate rises in America. So we saw a lot of strength in the US dollar, particularly against the Japanese yen. We broke through the 107 level where we were sitting at prior to this and reached all the way up towards 109 to 200 pips gained there. That's a new 6-year high on the dollar yen. If we go to our monthly chart, the last time we were here was in 2008, as you can see at the bottom of the chart. So new 6-year high, smashed through the 107.33 area. Also the euro dollar, which had been forming a temporary uptrend, reaching back into the downtrend channel. We spoke about this yesterday in our webinars as well. Feel free to join anytime you like on the optec.com website. So euro got smashed down as well from 129.80 all the way down to making it actually a new low at 128.30. And yeah, so we had a lot of dollar strength across euro, yen, and also Australian dollar as well, which had managed to rise up to 91 and now has fell almost to the low, to around 0.8935 onto the low. We've had a brief correction now, and we'll see how that continues. Gold price also went as low as 12.15. Often dollar strength translates into gold price weakness, and we saw that again yesterday. We came all the way from close to 12.40 down to 12.15. That's a $25 decrease, a 2% move. Gold's 12.24, so $12 is 1%. $120, 10%. Crude oil's doing quite well after OPEC decided to cut production during the course of the last few days. So thank you for joining us. This was the main news in the market. We're going to be having these videos coming out daily, and lots to look forward to. Tomorrow we don't have a very action-packed schedule. Take you quickly to have a look at tomorrow's news. There you can see a lot of high impact news, red news, whereas tomorrow's going to be quite quiet. Not a great deal, so calming down a little. We've had an action-packed days for the last few days, and tomorrow will be calming down, but there'll be a lot of market reaction to the Scottish poll vote, which at the moment is coming in around 52-53% towards no for the independence. So thank you for joining us, and join us again soon.